So in the income statement, there is always an inventory that is recorded in the pre-adjustment, and there is always an additional information that will need you to adjust so that you get the correct inventory balance. So in this video, we'll be doing the trading stock surplus, trading stock deficit, how to recognize that this inventory will record in the income statement as a surplus or deficit. How do we get the surplus or deficit? Then the effect of cost of sales on the trading stock, right? So if you don't know, understand, but the trading stock, this is the stock that the businesses bought in order to sell to the customers, right? And when it is bought at a cost price. That cost price affect the cost of sales, right? So the stock is also recorded, so the records will be kept, but at the end of the financial year, there will be someone who will be doing a physical stock count, which means we'll be counting 1 2 3, which is the inventory left. So the records will be compared to the physical stock count, right? So let's go straight to the video. We'll be using also an exam question to illustrate this difference. So firstly, there is a trading stock deficit and there's a trading stock surplus. So trading stock deficit occurs when the physical count is less than the records. So the physical stock count, I said, it is when at the end of the year we appoint one of the warehouse person or storeman to count the inventory left and say or calculate the balance or the value of that inventory so that it will be compared with the records. So what are the records? These are the records is the value of trading stock in the trial balance, and that value must exclude any cost of sales not recorded. Why cost of sales are excluded? Because cost of sales, it is when the goods are sold to the customers, right? It is the cost of goods sold to the customers. So that means the value of trading stock will decrease. So that the records, it is the value of trading stock in the trial balance. But if there is no additional information that says that there were cost of sales that were not recorded, then that means there is no nothing will affect the records. But now if there is a additional information saying that there is cost of sales that are not recorded, then that means the value of inventory in the trial balance, which is at the records, will be deducted by the cost of goods uh, sold but not recorded. So what is the trading stock surplus? So take note, deficit, it is when the physical stock count is less than the records. Then coming to the trading stock surplus, occurs when the physical stock count is more than the records, which means now the physical stock count must be more than the records, right? So I think I already explained what physical stock count are and what records are. So what causes the deficit? So it is caused by theft, damage, and errors in records, because in deficit, physical stock count is less than the records. So if let's say we recorded inventory of 10 rand, right? But now at the end of the year, on the last day of the year, then one of the staff at the warehouse stole maybe two goods. Then that means when that person is counting the value of goods will be less than the records, which is the one that are in the trial balance, the one that were recorded throughout the year. So theft can cause that, and the damage, which means damaged stock will be wasted. Troll will be taken out or to the dustbin because it is damaged. So that means that can also cause a deficit, and also error in the records. Let's say if our bookkeeper overstated the value of inventory of 10 rand and recorded it as 100 instead of 10 rand. So that means the records will be more than the physical stock count, and that one is the error in the records. So what causes the stock the trading stock surplus? It is caused by records errors, as I said. So if there is an overstation, which means instead of writing 10 rand of value of inventory, you increase the 100 rand. So that means when you count the physical stock, or the physical stock will be definitely more than the records, which is the value of inventory, the trial balance, excluding any cost of sales not recorded. And also here, let's say our suppliers, we buy goods to the suppliers, but they delivered more goods than we ordered, so we're gonna record less. But according to the goods in our warehouse or storage, they are more than the value of those goods, which is the goods that we're supposed to record. So that can also cause the trading stock surplus because the physical stock count will be more than the records. Then now where do we record the deficit? Is recorded on the expenses, and the surplus, real surplus, is recorded on other incomes, right? So let's take this quick example from one of the exam question papers in November. So Kingston Traders, the information relates to the financial year ended in 29 February 2020. Goods are sold at a markup of 40% on cost. So the markup will help us get the cost of goods sold, right? Because we're doing the trading stock, we're not interested in the sales. So prepare the income statement. So that was the question. They say we must prepare the income statement, but now we're just gonna focus on the trading stock adjustment. So firstly, information A, in our pre-adjusted trial balance, they give us a trading stock, which is the value of the records without any cost of goods not recorded, right? It is 221,000. And information number 1 says that cash sales of 18,229 February 2020 has not been recorded. So that means there are goods that are bought by the customers, are sold to customers for 18,200, which means this is the selling price, and are not recorded. So that means we need to calculate the cost of those goods and increase our cost of sales too, because they are also not recorded. So how do we calculate that? They stated that a markup, let me not use this, yeah, so they stated that a markup, where is the markup, is 40% on cost, right? So we're gonna use that 40% on cost to calculate to calculate what do we calculate the cost of goods sold that have the selling price of 18,200. Okay, we are just reading through our adjustment. Then number 9, the physical stock count as revealed for the following stock on hand. So trading stock that was left, it is 220,000. 220,000 trading stock left, or trading stock, or that is counted. This is the physical stock count. The value of it is 220,000. You can see that it is less than the trading stock, but remember, before you compare it with the records, you must also deduct the cost of 18,000 in that record. So we're not gonna deduct the 80,000 straight, but the cost of that 18,000. So how do we calculate that? So let's calculate it in this part. So we have 18,000. I don't know how to write with this thing. 200, right? Multiply by. Then what we want, remember, when you buy goods, you buy goods at 100%, but now when you sell them, you add percentage so that you arrive to the selling price. You can't buy goods at 5 rand and sell it at 5 rand. So what do we want? We want 100% for the cost of sales, right? And we have 140 for the selling price, because cost of sales must be lesser percentage than the selling price. You can't buy something with 5 rand and sell it with 5 rand. You must sell it with 7 rand. So that means you added a percentage. So what we want is the cost of sales of 100 rand percent, and divided by 140% of the sales, which is that 40 plus 100% of cost of sales. Then you will get your answer as 13,000. So when calculating the records, we'll say 231,000 minus 13,000. This 13,000, which is this one, which is the cost of goods sold that are not yet recorded, and you will get your answer as 218,000, right? Then the physical stock count, what was revealed, is 220,000. So you can see physical stock count is more than the records. And what I said here, surplus occurs when the physical stock count is more than the records. So that means in this case there is a trading stock surplus. So how do we calculate it? It is the difference of the physical stock count and the records. So the surplus will be 220,000 physical stock count minus the records of 218,000. Then the surplus will be 2,000. Physical stock count is more than the records, so that means this is the surplus. So let's go. This 2,000 is recorded on other incomes. You see it's 3 marks. So this is the working from the memo, but if you don't understand it, you can use mine because they are simple. But what they did, they taken the trial balance inventory and they less the cost of sales not recorded yet, and they deducted the physical stock count. So you can see that's what we did. Firstly, we listed 13,000 so that we get the records, then we compared with the physical stock count, and then we said that 218 minus also, or that 220 minus 218. So you can see you will get your 20,000, but use this one for more understanding. But if you are good with the understanding of it in the exam, to save time, you can use this one too. So that was all about this video. Please like and share it to your classmates. Don't forget to go to the comment section and tell me the topic that you're struggling with accounting, so that